All right. Happy Thursday, everyone. My name is Greg Dixon, and I'm here with Maurice Thomas Jr. as part of the Notes Center. And today we're going to talk about life insurance. It's September is Life Insurance Awareness Month. And
Yes, yes.
Maurice, I didn't realize until recently that as well as being a professional notes mortgage note investor, he's also a licensed insurance broker. So today he's going to talk a bit about different kinds of insurance that are available, and also some things that note investors do with whole life insurance products. So maybe you can take it away here, Maurice.
Okay, great introduction. I totally appreciate that. Love that intro there. So as Greg stated, September is Life Insurance Awareness Month, and today we want to highlight, what uh, um, our community is doing when it comes to leveraging the different types of insurance policies, more specific on the whole life policies, how mortgage note investors are leveraging mortgage, how they are leveraging the whole life policies overall. So just to give you an idea, there are two types of insurance. Well, not two types, there's different types of insurance out there, but the main two that I want to cover today is term and whole life policies in general. So today I'll discuss maybe the common features, coupled with the differences in the two, a couple books as well. And I shouldn't take much of your time today. And then Greg is going to jump in, throughout this process here, with any, just to clarify different things, because I can get super excited. As you can tell, this is not like last week. I have 6 packs of apple slices from McDonald's today, coupled with a large coffee. So you can tell the energy is quite different. I was well prepared for today. So the two types of insurance that I want to cover today is term life and whole life. I'm really passionate about term life because it's the most affordable. Okay, and that's something that I will touch on quite frequently. But the most important feature is the most common features between the two is that they provide a death benefit, to the beneficiaries in the event of someone's death. Okay. Uh, what they differ in is, of course, length of coverage, the cost, and the cash value accumulation in some of the policies out there as well. So, for example, the death benefit. So, both term and whole life policies, they provide a death benefit. We all know, or if you don't know, this is a tax-free payout to beneficiaries when the insured person, passes away, as long as the policies is actually enforced. Okay, so that's a big portion of there. You have to make sure those premium payments are made to keep the uh, policy active. Okay, and that's another important piece here. The premium payments are something that's required for both of them to maintain that actual coverage. Now, going to the differences, the most important piece is the length. Okay, so term life insurance, and like I said, I'm very passionate about this one because you can get 10, 20, or 30-year policy. Um, is pretty much what it says. If the policy dies, if the policy holder dies within the term, the benefit is paid out. If the term expires and the policy is still alive, the coverage ends and there is no payout. So that's something that other let's just say other policies have on, to kind of stand out when it comes to the term policy in general. So if I was to give you an example, let's say John purchases a 20-year life insurance policy for 500,000. If he passes away during the 20-year term, his beneficiaries will receive $500,000. If John outlived the 20-year policy, then the policy expires and there will be no payout. All right. So it's exactly what it states. Again, I like the whole life policy. I like the term life policy versus the whole life policy because one, the price, and then I'll explain that here in a few. So I digress. See, Greg, coffee's kicking in. You see it? It's working. um, so yeah, so let's like I said, John purchases a $500,000 death policy. He passes away during that 20-year term. whoever the trust could be, whoever the beneficiaries are, they will receive that 500,000. Now, on a whole life policy, with the whole life policy, what they provide is the coverage for entire lifetime of the insured person, as long as the premiums are paid. The death benefit is guaranteed, and the policy does not expire as long as the premiums are maintained, as I said before. So in this example, I would say, let's say Sarah buys a whole life policy for $250,000 when it comes to the death benefit. She pays premiums throughout her life. However, when she passes away, her beneficiaries receive $250,000, even if she lives to be 100, years old. All right. That's something that, like I said, that's the main difference there. Okay. Now let's go to costs. Term life policies are typically more affordable in terms of premium payments, especially for young and healthy adults. Like for myself, maybe I should have pulled up my policy. Maybe I'll pull up my policy here and show you what I have in place for my 5 children, coupled with my wife. And the premiums are lower and more, to be more specific, there's no cash value of that term life policy. What I subscribe to is, having a policy in place and investing the difference into mortgage notes. So ask me about mortgage notes. Whereas with a whole life policy, there tend to be higher premiums, payments. Not only that, they provide a lifelong coverage and they build cash value over time. Now, the cash value accumulation in a whole life policy, that component is the portion of the premium payments that go into the cash value account, which covers, it pretty much grows over the time of the guaranteed rate. The policyholders can access the cash value through loans or withdrawals. Okay. Now, like I said before, term life policy, it does not accumulate cash value. So premiums are primarily for the death benefit, and there's no investment or saving component with term life policy. However, as I stated before, the cost, the cash value, different things I need individuals to actually think about. Now, if I was to give you an example, let's say Mary holds a whole life policy with a cash value of, let's just say $50,000. She can borrow against this amount or withdraw if she needed while she still is alive. And this is where it gets interesting. So within our community, within the mortgage note community, and the group that I belong to, these individuals leverage whole life policies to build a dynasty trust. Okay. Now, when you build your dynasty trust, more specifically, you are primarily taking out policies on every individual that's, every individual within the family tree. So if it was myself and I had another child born, I'll take out a policy on him. And again, while I'm paying those actual policies, I can go in and access that cash value to buy mortgage notes. So that's something that has been, the community has been leveraging overall. Now, again, I don't, dive into more of the whole life policy because of the price point. Okay. Like I said, I have 5 children. I have 5 children. So when it comes to, the whole life policy, I do have a dynasty trust in place. I will not share. I will not share it on live here because I want to make sure that it's okay. But I'll give you the individual that I have when it comes to that policy. That coupled with not policy, but that actual dynasty trust, and then not only that, getting a living trust as well. So getting those in place. If you need more information or want to learn more about the dynasty trust, I would probably start off with what would the Rockefellers do. So to learn this, maybe Greg, we can dive more into this over the next several weeks, since September is, life insurance is. You see, I made that word up, insurance.
I think we could probably write a review of that and post it on the website at the notecenter.com. And maybe next week or one of these episodes we can do a deep dive review of that.
Absolutely, absolutely. So yeah. So if you are paying attention to the whole wave or social media when it comes to dynasty trusts and different things of that nature, there are primary structure with whole life policies. And what the Rockefellers do is pretty much a book around financial wisdom and philanthropy and different things of that nature. So definitely want to check out what the Rockefellers do. If you're not into the whole financial independence and kind of understanding what you want to do at the moment, and you don't know what to do, I don't know if I should start off with a term or a whole life policy. I would start off with Becoming Your Own Banker. Okay, this is a good read as well. Becoming Your Own Banker by Nelson Nash, and it's a fairly quick read too. It's only about like 100 pages, and not only that, with the 100 pages within there that provide examples on whole life policies, the different policies in general. So, but in summary, term life insurance policies, they provide affordable coverage for a specific time, specific term. Let's use the word term, making it a popular choice for temporary financial protection. However, I teach individuals on how to invest the difference. So let's look at your financial house before you start investing in notes. Let's see if you have life insurance. Let's see if you have a will. Like I said, do you have a trust? Let's start thinking about estate planning and different things of that nature. However, the whole life policy, it offers a lifelong coverage. It builds that cash value, and it tends to have a higher premium, that can serve for long-term financial planning too. Not everyone is there at that level. However, this is a great tool when it comes to the whole life policies. But the choice between the two depends on the individual needs, their budget, and their financial goals. So when I meet with someone, I'm meeting that individual where they at. I'm not putting any stress. I'm just listening to them, to be honest with you. I'm not even throwing anything out, Greg.
Yeah.
But outside of that, Greg, I think we should do a review. And like you said, we can put the two books on the Note Center. And then I would encourage individuals as well to head over to the Notes Center with an S and kind of look at some of the articles that we have there as well when it comes to, mortgage note investing, coupled with the term and a whole life policies as well.
Yeah, I just want to sort of reiterate something you said. So I think the idea with the whole life policy is the whole idea is keep your money moving, right? So
Absolutely.
your whole life policy will have a cash value, and you said you can either loan that to yourself or withdraw it in some ways. So I think the idea is that you take that money out rather than have it just sit there and waiting for somebody to die. You're taking the money out and you're making it work either in a mortgage note investment or some other investment. Is that a fair way of describing it?
Absolutely, absolutely. And Greg, I probably dominated the conversation a bit today, a lot, but I'm we're real big on social proof, when it comes to just having not just saying, hey, do. However, here's what we are doing within our community.
Yeah.
And I think a great guest will be maybe we can get on. I tell you what, I won't name drop this episode. I have to learn that. I have to learn. I have to remember.
Yeah.
I looked at my post. Do not name drop. So we won't name drop. But what I say is, like I said, since September is Life Insurance Awareness Month, let's get a couple individuals who, one, I know an individual who is adamant about term life insurance. That's kind of like where I learned as well, and he kind of brought me under and sponsored me. So I'll see if he's available, him or his colleague as well. She's doing amazing things in this space. Or we can get someone that's in who's really into the whole life policy and can explain how they structure their deals, coupled with the Dynasty Trust, more specifically the Dynasty Trust out of Tennessee, because the Tennessee Trust lasts 360 years. So you couple the Dynasty Trust with a living trust, and different things of that nature. So
Yeah.
again, I know it in theory, but am I doing it? No. So we
Yeah.
don't want to be one of those guys saying do, but we're not doing it.
Yeah. And the good thing is that there are lots of people doing it because you and I know a number of different people who are
Yes.
offering some variation of that plan. Like even in Canada, some people are doing that, even in
Yes.
Canada.
Yes.
And so it's not something that we invented on this show. It's something that people are doing. And you're right. We should find somebody who's really living it and can show really concrete things about how that works.
Absolutely. Absolutely. You know what, Greg? You just made me think. We have different types of learners. Of course, individuals can play this back for the visual, but I didn't think of putting any visual aids out there. I didn't think about putting any pictures or I get we like I said, we upload something to the notes center
Yeah,
so
we'll
and have
have we can create an article about this and put this embed this on the page, and we can put the visual aids. We can add that later. So be sure to go visit the notecenter.com. I think there's a place where you can register to get a newsletter and go find what we're going to add more and more resources there. And let us know if you want to be a guest on the show and you can come and talk about your insurance or real estate or investment, opportunities or insights. If you want to come and join us and have some fun. um, I'll warn you that we're never quite sure where we're going to end up, but that's part of the adventure, right?
yes. We don't want it to be, you know, that formal where
Yeah,
we're just having fun.
yeah,
We're serious investors, but we're having fun, especially in today's climate and society, where everyone trying to figure out this thing called life, so
yeah,
we're making sure we meet individuals where they at. And if you have a topic that you want us to cover, we're not experts in a lot of areas, but we do have a community who has
yeah.
we have so many individuals. We have retired military individuals. We have
Yeah.
dentists, doctors. List goes on. We have Greg. Greg is in Canada doing things. I don't think you guys know. Greg is in Canada. He's not in the
Yeah.
States here.
Yeah. Sometimes I spend times in California, but right now I'm in Canada. And anyway, your talk about term insurance versus whole insurance is a bit like the Coke versus Pepsi debate, right? you know like there's advantages to both, and it's up to you. See, I have a thing about this whole thing about diet Pepsi versus diet Coke. I think they both taste like dishwater, so it's an artificial economy. But that's my pro sugar bias to all of this anyway.
Right. And to take it a step further, depending on where you're at, and I want to ask you this: what do they call? Do they call it pop or soda in Canada?
Oh yeah, that's yeah, we call it pop in Canada, and it's soda. That's the sure giveaway. Bonnie calls it soda. I call it pop.
I call it
And then
pop
there's
too. I'm from the
roof
Midwest.
and roof. and
So,
and,
so
and we live in Canada, eh?
So I like that you said that that analogy. When it comes to the term
Yeah,
in the whole life, when it comes to cola, is you can say cola is a mixture between the two, and like I said, it's different. There's other policies out there, so we'll just call it cola.
yeah,
But like I said, we're not experts in that space. We just thought we'll bring it up because of September
yeah,
and this life insurance awareness month. So again, Greg kind of mentioned at the beginning, I am licensed. So if you have a policy, you
yeah,
want me to review it, even if it's not a good fit for you to go with me, I definitely want to have a conversation and get you on your financial journey as well. And then
yeah,
Greg will be available as well when it comes to just you know what, Greg is someone where he is what is that thing called? The Russian knife, not Russian knife, but the Swiss, what is it called? Swiss
The
knife.
Swiss Army knife. Yeah, I know a little bit about a lot of stuff, enough to be dangerous. There we go. But anyway, I think in the spirit of September is Life Insurance Awareness Month. If you don't have any life insurance, you need to fix that, right? So,
Yeah.
and the to your point, term insurance is something you can go out and probably get it in the next 15 minutes, and it's going to be relatively inexpensive. So you need to have insurance, and then you can figure out and talk to, the more nuanced discussion, what's best, what kind is best for you, term insurance or whole life, or I think sometimes they call it universal life. There are various names for it.
Yeah, different names. There's different names out there, Greg. You spot on.
Different names for it. So yeah, contact Maurice. We're on LinkedIn. His contact information is at thenotecenter.com. If you want to talk about investment with mortgage notes, independently, insurance independently, or mashing the two together.
Yeah, we didn't dive much into the whole life policy and how to buy notes with that policy, because I am not I'm not the SME in that area. I'm not the subject matter expert.
So we'll find somebody who is, and for
absolutely.
a future show, who can go through all of the mechanics about how it works. Because I think, for some, that the whole notion is completely new to them. What do you mean? What? Using an insurance policy to invest in mortgage notes? What's that all about? So anyway, we hope to clarify that in a future episode.
Absolutely. Well, Greg, I think that's everything that I have.
Okay. Yeah. No, that's good. We can let everybody off for good behavior, and and to go off and enjoy their Thursday.
Absolutely. And we'll appreciate you guys, kind of tuning in. And again, if you have any specific topics that you want to cover when it comes to mortgage note investing, no matter if it's partials, joint ventures, hypothecations, we're looking for capital partners to purchase more assets as well. But again, if you have any questions, concerns, could be observations, anything, you can go to thenotecenter.com and submit that information, or you can find Greg and I on LinkedIn, as well.
And you have quite a few things on your YouTube channel.
You know what? I did not. Okay, Greg, thank you. Thank you. You can head over to the LinkedIn. You can head over to the YouTube channel, T as in Tango, IG Legacy. And you pretty much just type in TIG Legacy, and you can find that channel with a bunch of resources out there when it comes to mortgage note topics. And again, if it's not something that you can see, if it's not something you can't see, if you cannot find something in the Note Center or with our series of videos, just shoot us a topic and we'll discuss it.
Or your website, because we have 7 or 8 videos on your website, right?
Absolutely. Great. You are really hooking me up. Thank you. So you can head over to tiglegacy.com as well. T as in Tango, IG Legacy, all one word, .com. And again, it's a bunch of resources over there. It is an active link to my calendar. So if you want to get on my calendar and discuss your term policy, whole life policy, or insurance in general, or just your financial journey and where you're at, we can have a conversation there. We can converse there. Just find a good date and time that works best for you, and I'll be sure to reach out to you.
Yeah, no, that's fabulous. There we go. So just reach out and talk to Maurice, and we'll. What do you say? We'll hook you up with something really good.
Absolutely. If Greg and I are not your guy, we'll definitely connect you with someone.
We know a lot of people.
Absolutely.
We know a lot of people. Okay, well, happy Thursday, everybody. Happy Life Insurance Awareness Month, and make sure you've got a policy of some sort.
Absolutely. Stay safe, stay healthy, and happy investing.
Happy investing.